Episode 12 of The Wealth Architect. I'm Emilio Despirito. And you ever wonder how entire neighborhoods or cities get built and who's behind all of these projects? Who makes it happen? Well, today we're joined by Tim Eden, the founder of Starr Capital and one of the sharpest minds in mixed-use real estate development, with hundreds of millions of dollars of deals under his belt. From One Loudoun to National Gateway, Tim knows what it takes to structure, fund, and close complex projects at scale. Get ready to uncover the strategies, the insights, and negotiation tactics that turn raw land into thriving communities. Let's go. What's up, Tim? Welcome.
Thank you.
You're welcome. I'm glad to have you here, Tim. I had the opportunity to meet you over the course of the past year and a half, maybe, with your latest project, which brought you, back to Rhode Island, to a state that you said you love, and you're here often, and you actually live here as well. But you're working on a new project, and it's called the Center of New England. Can you tell us a little bit about that project?
Sure. So 35 years in the real estate business, most recently in land development mostly, and housing. The big focus is on housing development right now. So we got into a big site in Coventry, Rhode Island, right off of 95, south of the airport, 145 acres. And we have approval for over 900 residential units, a mixture of townhouses for sale and multifamily rental, as well as a smattering of retail. So it's right down in our wheelhouse for community development. It's been in bankruptcy for about 12 years, good location, and we were able to secure option agreements for the properties to work through the land development issues. So a lot of value to be created in that process. There's money to be lost for sure, and we have a substantial investment in the properties and in the design and the entitlement. But it's fascinating end of the business. You're creating the community, you're designing and bringing it to life, and you're trying to develop product for which there's consistent demand. So you're always trying to gauge demand, and you're trying to drive leasing where the value is created in these projects, either residential, apartment leasing. Retail leasing is the name of the game. And on the for sale side, it's driving sales. You're delivering the right product to the right marketplace at the right price, and you're hoping to capture demand on the sales side. So that's that is fundamentally our business model is finding sites and working the project from the ground up, creating the value in the beginning. If we can create some land value, we can roll that into the vertical development, or we can develop for fees as the opportunities present.
Okay, good. And now you were talking about doing 900 units here in Rhode Island, and some commercial as well too. I mean, the length of time that it takes to get a development like that off of the ground, Tim, is not for the faint of heart. There's a lot of risk in waiting, right? How do you keep, I guess, when you're going into a situation where you have investors, and maybe this is all funded by you, maybe you have investors here, how do you keep your investors in a situation like that, in the game, holding out, like still moving forward while you're going through that entitlement process, while you're going through everything to get that land ready to go and then to build? You're a couple years out.
Yeah. So our business plan is very well defined. And that is part of the beauty of our business in the entitlement game and pre-development. You have a very specific time frame that you're dealing with, and you're trying to get the property through the entitlement process and either sold or refinanced within 3 years. So it is a good target return timetable for any investment. Most investors are going to be looking for their money back in 3 to 5 years. So we set up the expectations early on, and we communicate with our investors on a regular basis as to what the progress is and what the next steps are and where we see the transactions coming as a result of that. It is a big project and a lot of inventory, but we're seeing high demand and limited supply in Rhode Island. That's been the history over the last 10 years, approximately 400 apartment units delivered each year and 800 new for sale units delivered each year. And that is a fraction of the inventory.
That's right.
So the housing inventory in Rhode Island, 465,000 units. And you think of delivering 1,200 units a year, that's 0.25% replenishment rate or growth for your housing sector, 0.25. The national average is 1.0. And that includes some higher numbers in the Sun Belt. If you look at Massachusetts, Connecticut, New Hampshire, all of New England, it's about 0.8. That is the replenishment rate on average.
It's low.
So it is low.
Yeah.
And but it's a problem. We don't have enough sites, and the production cycle is long, and it's getting longer. Construction costs are up, and it just takes a long time to get things done. And I can touch on that a little bit, which is we're looking closely at modular housing as a production technique to try and speed that up, reduce our time frame for delivery. But costs are a problem.
With modular, cost is a problem? It costs more?
Construction costs are a problem across the board.
Okay.
All costs are up for materials and labor. Modular helps to augment that, primarily by reducing the time frame for delivery and the risk of on-site work. And a lot of the work is done in the factory. So we're looking closely at that as a way to get our costs down.
Got it. And also time for the delivery time frame, right? So it's quicker to build a modular home, isn't it?
Very much.
Yeah. Do you know what the difference is between stick and modular? The difference in how long it would take to build one versus the other?
There's no one right answer to that. It just sort of depends on the project and the staging. But in short, modular housing manufacturing facilities can deliver a 60-unit apartment building in 3 months and delivered and assembled on site. So you can imagine if you're able to get that building delivered in 3 months and lease it, while it's being delivered, that's pretty good. That's a material benefit to your cash flow.
In China, they can build bridges in 3 days. Have you seen this?
No, I've not.
You haven't seen this? It's insane. If you look at what's happening overseas in different places, I think it's absolutely fascinating how fast they can build stuff. And it doesn't mean that it's going to be as well built or as great, but I mean, they're building some pretty amazing things. So I always like to see what could we be doing better? When I hear 3 months turnaround on that many units, I think that 60 units, it's pretty impressive.
Yes.
But on the other end, there's always room for growth, right? I mean, that's not the topic of our podcast today, but I'd suggest anybody to take a look, go on Google and see how fast they're actually building things in China. It's unbelievable.
Yeah.
It's wild. I mean, there's got to be something we can take from that. Do you live in Rhode Island, Massachusetts, and Connecticut, and you're thinking about moving? Well, the worst thing you can do is ask your friends to come help you, because then guess what? You owe them a favor. Never mind, you're going to be spending a ton of money on beer and pizza, and stuff is going to get broken. It sucks. Call our friends GMET's Moving and Storage. They're going to be able to move you, especially in this marketplace, but they can actually ship your stuff around the world and move you with their crew of dedicated professionals anywhere in the United States. Go ahead and Google GMET's Moving and Storage, and they'll help you out today. I want to jump into some other topics here, but I think the center of New England, is important, because wherever you are around the country, I think that developing is developing, and it's all based on relationships. You're dealing with the local, state, and federal, right? You're dealing with all of these different government bodies. You're dealing with neighbors. You're dealing with banks. You're dealing with contractors. You're dealing with 100 people in the process.
Yeah.
And none of it is easy, nor can it be replaced by AI. This is a job that has a certain future, and it has a certain type of person that has the mental fortitude to get it done. Right? Yeah.
I don't recommend it to anybody.
No, you were just telling me before we started the podcast, Tim, you were basically saying that there's really not many upsides in development right now. And I was like, what? I'm shocked.
Yeah. Yeah. Well, there is upside, but it's difficult.
Yeah.
And especially compared to the digital world right now and how fast these software companies can scale, and they get a good product out there, and their addressable market is billions of people on the internet. It's just fundamentally changed marketing and product development. And that's why you see this tremendous wealth creation out there in the digital world. But in the real estate space, it's difficult to get these things off the ground and create value along the way. But it's we're land guys fundamentally. We find sites, and you have to choose wisely. That's the important thing. In this particular case, we did find a good situation, an infill site. The property's already subdivided, and we had a certain level of entitlement going in. And now it's really a manufacturing process. We hope to start our townhouse development first quarter of next year, and we expect to see good sale activity off of the internet prior to the development of that, and we think we can burn through that in a couple of years. The apartments are very interesting. It's really our main focus is the apartment world. It's the favored sector. It's the favored asset class among institutional investors, long-term cash flow, stability, financing. And the apartment unit, it's the same. The one bedroom here and the two bedroom here are the same in every state, in every city. So it's a commodity.
What do you mean?
It's a commodity. That apartment unit is a commodity. Everybody needs an apartment that's starting out in life, or if they're retiring and they're slowing down, they want an apartment, or they might want a condominium. But it's that fundamental apartment unit, the one bedroom, two bedroom. And that's where modular comes in, because that unit is pretty much the same. It's a kitchen, a bathroom, a living room, and they come in, they're built in sections. They're built in 14-foot by a 30-foot or 20-foot sections, call them boxes. They're prefabbed, they're built on site, down the conveyor line. They put in the bathrooms and the kitchens and the HVAC, and they ship them and they assemble them on site. We're in the commodity business, so that's why the modular, we're so fascinated with being able to plug that in. But this job is a housing project. We intend to scale up to deliver the residential community here. We don't make it up. We've learned from land developers in this area and also in the Washington D.C. area. It's a well-worn path to production. Housing production is land.
Yeah, absolutely. Wow. And you have some successful projects all around the East Coast, especially Washington, D.C. I think Bethesda, Maryland.
Correct.
Right? Yeah. Yeah, it's pretty amazing. So you're coming with all of that behind you as well, too. I want to get in the weeds, Tim. I want to get in the weeds of it, because this is the stuff that I think a lot of people really need to know, are curious about, and to kind of look down and take a look at the business for what it is. What is the biggest lever that you've ever pulled in a negotiation that turned a dead deal into a done deal?
I would have to think long and hard about that. It usually goes the other way. It's usually something that was said that killed the deal. And
said to you?
Well, either
you say to somebody
either
else?
I said or somebody said to me. But it's not unusual for things to come to an impasse where you can't move forward. And that does happen. By and large, again, it's a matter of setting expectations early on in the process and trying managing everybody to a goal. It is, real estate is a very legal intensive business.
Sure.
Involves on contracts and contract law. Lawyers can drag things out. You can't do business without them, but they can drag things out. And I've had I've had a handful of deals that go south because the lawyers couldn't agree, and they couldn't react in a timely manner with effective communication. So
yeah, I agree with that. I've seen some deals go south because of attorneys too.
Yeah.
I mean, they're necessary, not to throw them under the bus, but attorneys can really muck things up.
that's right.
Yeah. Yeah. We try to keep the attorneys out as long as possible.
Yeah.
Yeah. So what about walking away, right? Like when you're in a transaction and negotiate, you said an impasse, right? What is like that, something you look for where you're like, you know what, this is a major red flag, I'm walking away. Can you give us examples of any that you've run into?
The best example is that you don't have a party at the other side of the table that wants to transact. We're buyers and we're sellers.
Yep.
And you have to know who's at the other end and what their motivations are. Everybody works in their own self-interest.
Sure.
So if you can figure out what that individual, what he or she really wants, then you can tell your message, and you can make a deal happen.
Yeah.
There's good sellers and there's bad sellers, and if you recognize someone who's really not a seller, that's probably been something that I've learned the hard way a few times. Not being ready and willing to walk away when maybe I should have walked away. Maybe try to push things too far and chase things that are not there.
Have you ever got a project, have you ever finished like the horizontal on a project and you're going to sell that, ready to rock and roll, ready to build, and then you realize that the buyer that you had thought was the right buyer just wasn't? Maybe they weren't motivated, maybe something happened where they weren't prepared. Have you ever had a deal like that fall apart?
Sure.
You have.
Of course.
Often? He says, sure, like that's happened probably on many occasions.
It happens.
Yeah.
Yeah.
Like what was like, can you give us an example of like, what you thought was going to be a successful project and then the buyer kind of like, what was the red
Well,
flag there?
you know, time kills deals. And when you have things drag out and you have unforeseen events impact decision making, sometimes, things are beyond there's a lot beyond your control, especially in our business.
Sure is.
And, interest rates ticking up was a significant blow to the real estate business. It pushed values down. It drove costs up. I don't particularly think it was a good decision. And I think that interest rates, should come down
I'm with
to
it.
reduce cost and to boost values. So it's really been impactful to the construction trades. And I'm such a bull on construction as what it does to the community. Construction employs so many different people, not just construction workers, but all trades, design, permitting. I mean, you name it. These construction projects employ a lot of different people from a lot of different sectors. And when you raise interest rates, you cut back construction quickly, which is what has happened. And so, that's unforeseen, and that has certainly been impactful in some of the transactions we've worked on. That's the biggest thing right now is external shocks to your planning process, and working with buyers and sellers. I mean, it's a big decision. People pick a decision to buy something. They want to be sure, and they can get spooked pretty quickly.
Yeah. Oh yeah, we see it. We do see it. I can't imagine at that level. When you're starting with a raw piece of land, what are the first three things that you look for before moving forward? So you're identifying a project. What are those first three things you're looking for?
The first thing is who's the seller and why are they selling? And are they realistic, are they a realistic cooperative seller? That's probably the first thing. The second thing is, what is the zoning allow and what is the comprehensive plan for the town
Key.
recommend?
Yeah.
So there may be a rezoning change, but if it's consistent with the plan and the town is supportive, then that's a manageable risk for which you should get paid for that risk. So that would be the second thing is the entitlements in the base underlying zoning. And the third thing are just simply site constraints. Are there utilities there? Are wetlands going to be a problem? Or is there contaminated soil? So these are sort of site conditions.
Some unknowns until you start digging.
That's true.
Like the center of New England, your latest project, you didn't know what you were going to find in that land. I remember the site work was your biggest.
Yeah.
You were most concerned about that last 6-7 months ago when we talked.
Correct.
Now you've already started that.
Well, we're knee deep into, investigating and environmental studies, and we have all kinds of challenges, but that's what we signed up for, and that's what we're working through.
That's right.
And that was the opportunity that we saw. These are sand and gravel operations, former sand and gravel operations that were not properly shut down. And when the properties went into receivership and bankruptcy, they languished. And real estate's a depreciating asset, and that includes land. If you don't take care of it, you don't provide for it, you can lose your entitlements, you can lose your value. In this case, these are former sand and gravel operations that were not properly shut down. The properties don't drain properly. We've had standing water that we've had to manage, and all that has created conditions that need to be rectified. So that's part of our agreement with the receiver is to work through site issues that we do have in the way of soils.
And so if you run into a situation where the property has not been draining properly for years on end, I mean, you were talking over 10 years, it creates what almost looks like a natural wetland area. So now you have to go and pull studies and pay all of these people to come out and prove to the government that this was not a natural area, that this was, am I correct? That this was
Correct.
due to negligence.
Right.
And then hopefully they'll allow you to what? Fill it?
Correct.
Okay. All right. And the whole point of that is you can only build so many houses and within certain proximity of wetlands.
Correct.
Yeah.
Yeah. So, I mean, that's what we signed up for. We do have a master plan approval for 700 units that we got last fall. Those areas are out of the wetland areas. So we have development timeline for those properties, but then we have other sites that are impacted, and we are working through those conditions right now.
So many moving parts. What do you think is the biggest thing that people miss that cost them millions when working on land, when developing land?
Well, I'd say working with the municipality on utilities is a big factor. Electric, water, sewer, those big threes. You can get hung up with one of those agencies pretty quickly, and this
Yeah.
happened to us.
Yeah. Sewer probably being the worst. I would
It
imagine that
is.
sewer is probably the most invasive and the most cost.
Right, because you have a sewer authority, you have a water authority that they're their own fiefdom, kingdom, and they have they can drag you out very quickly.
Yeah. I mean, I've even seen just basic stick-built homes waiting for months for power. And I mean, think about it. Like, you're paying juice on the money, right? You're just paying that interest. You're paying taxes. You're paying insurance. You're paying, all of this stuff for your money just to sit there. It's the worst. It really hits your bottom line. So making sure you have all of that situated ahead of time is super important. What do you think as far as rookie developers? What mistake do they make that could instantly kill a deal or kill their credibility, more importantly?
Yeah, so it's underestimating the amount of time that it takes to get the approvals that you need or to sign leases that you need.
Yep.
So let's say you find an acre and a half on a major roadway, and you're going to entitle that property and lease it to McDonald's. That's a long trip. That is a long process, and you don't know if McDonald's is going to sign your lease until they sign, and it could take months to get a signed lease, and with the risk that you don't have a deal. So underestimating the time and the cost that's required to get to a lease and get to a transaction is probably the number one problem that you have. If you're buying a house, you're going to lease it out. That you can figure out. You can quantify that pretty quickly. What's the cost of the house? How much rent can you get? What's your return on your cost? That you can figure out pretty quickly. Trying to get through land development and leasing and the development cycle, you can get hung up in a hurry, and the time will really cost you.
Yeah, I would imagine. How should a first-time developer present themselves to a city or to a capital partner?
That would be after you worked at a development company for years.
So start somewhere else
and learn the ropes. You can't do it from scratch.
Agreed.
There's too many nuances to the business.
Yeah, agreed. You can listen to podcasts, you can listen to this, but literally until you get that real life experience, you shouldn't be doing it on your own.
No, and it takes a lot of money, and it takes a lot of time, and you have to have both. I mean, and most people starting out, they have a job, and so you don't have the time and you don't have the money to be able to pursue that.
So how do you start? I mean, would you, if somebody came up to you and said, "Hey, Tim, I'd like to learn the ropes." Like, what does a guy like you say? That's going to take time.
I say, don't do it.
Yeah. Don't do it. How inspiring. Don't do it. See that actually inspires me. I'm like, yeah, it's like, I want to do it now. Don't do it.
Well, you want to do what? What do you want to do? What part of the real estate business interests you the most, and why do you want to do it?
Yeah, I love the idea of providing housing because I'm out there every single day. I see the challenges of buyers, I see the challenges of tenants, and I see the lack of quality housing, especially here in the New England area where our average housing build is what, 1970, right?
Oh, it's
bad.
It's
bad.
an older aging housing stock.
I mean, we have that's right. Aging housing stock. And we have housing stock. Like, I just went and looked at a house yesterday, 1880.
Yeah.
The thing is like falling in on itself.
Right. Sure.
But people are going in and rehabbing these things, and that's okay. I mean, but that's our housing stock here in Rhode Island. Yeah. So I love the fact that you're bringing it here, but not only here, all along the East Coast and developers all around, the globe. I respect what you do. It's not easy. And I love that too. I love a challenge.
Yeah.
And learning. This is why you're here. Right? Like, I love learning from guys like you. Thank you. Hey, a special thank you to our sponsor, Annie Mac Home Mortgage, whose Cash to Keys product is disrupting the industry. Sick and tired of finding the perfect home, not having your offer selected? I got to tell you, it happens all the time. With Cash to Keys, Annie Mac gives sellers a cash guarantee for each of their buyers' offers. Stop bidding and hoping. Instead, bid with Annie Mac and bid with confidence. Don't just bid, but win. Annie Mac Mortgage. So, how do you approach raising capital? This is so important, right? And you said it's so expensive to build, to develop. How do you approach raising capital for massive mixed use projects?
Well, that's a good question. You have to break it down. And, we have, in this case, we are signing agreements with partners to provide the vertical lift. We can't do everything. And in this particular case, we have our hands full with the land and the entitlement, utilities, et cetera. And so our development partners will bring some of that expertise.
Is that a JV, a joint venture?
That's
Okay.
a joint venture. That's correct. You have to have a defined business plan. You have to have all your costs organized. You have to have a pro forma analysis of what the costs are and what the revenue is and what the profitability is. You have to establish a track record. So it's a heavy lift. Raising money for these projects is not easy, and you have to answer a lot of questions to be able to do that. In this particular case, we have our hands full on the land and the entitlement process, and we made a decision that we were not going to do everything, and that we were going to rely on the development community to team up with.
Yeah. Wow. So you're kind of more once that starts, once they start building, because you've handled all horizontal, you've got everything ready, the entitlements, you've got permission to go forward. Once the vertical starts, Tim, do you kind of get to just sit back, and are you a silent partner at that time?
Yes.
And you're basically, and we don't have to talk about specifics here because every deal is different, but overall, you're going to get your return on the land as they're selling the units in like a profit share type of situation.
Yeah. Yes.
Okay.
In this case, that is one of the avenues. We do stay involved as a managing partner at times, and as part of the management team. But a lot of these companies, they have their own management team, and they have their own investors. And so we're either a land seller, which is okay, or we will contribute to land and have an LP interest. To stay involved and the general partner and manage the vertical is a whole other level of commitment that that we will do as well. So we have multiple choice.
Wow. So obviously, the more you're involved, the less profit sharing you're sharing with your JV, with your joint venture.
Right. Correct.
Okay.
The institutional real estate market has evolved, right?
Yeah.
Since the 1990s, early 1990s, the advent of the real estate fund, that was the beginning of it. And so with that, a lot more institutional knowledge and technology has come into the space. So it's a lot much more sophisticated, especially when you get to fancy institutional quality office buildings, apartment buildings, et cetera. These investors tend to be pension funds, insurance companies, real estate investment trusts, professionally managed. So the business in general has gotten much more institutional. However, it is a fragmented market, and I would say a good 80% of real estate is still privately owned.
Yeah, family offices
or individuals, and that property can decay, and so that creates that opportunity for that asset to be sold and value to be created all over again. Real estate, a depreciating asset, you have to put capital into these properties, and if they deteriorate enough, then you have a problem. Then you end up with vacancy and blighted properties, and you have to start all over again. And you're seeing that in the office sector right now with massive vacancy, property values falling, big defaults, loan defaults. So there's a huge downward draft in office valuation and rents that go along with it, and it's a tremendous loss.
What's the fix? Is there a fix?
It's not easy. I mean, part of it is retrofitting these office buildings for residential. That's discussed, and that is the thing. Not every building is suited for that, but if you have a proper floor plate, yes, you can convert. But you also need a low cost basis. So you have to have bought the property from the lender for some ridiculously low price, and then you can afford to put the money into the asset But we are seeing that. We are seeing lenders foreclose on assets for cents on the dollar and sell them to a company that's going to retrofit the property for residential. So
Yeah.
that's taking some of the inventory out of the office base, and so it's going to reduce the general amount of office that's there. And we're seeing
the prices up.
we're seeing good demand in the Class A and the trophy sector.
Good.
But the C sector is going to get repurposed. It's going to get torn down, or it's going to get backfilled and renovated for another use, hotel maybe, or apartments. That's sort of the cycle there. And there's still plenty of property that's privately owned that needs to be recycled. So for people that are listening that have assets, family assets, property they've been holding on to for a long time, a lot of times the next generation wants to sell that property and get it back into production. And that's what you're seeing. That you're seeing sites come up for sale that weren't for sale before.
A lot of generational wealth moving around too.
That is a big factor. I'm glad you brought that up. The inheritance numbers are staggering. You've read this over the next 20 years, something like
Trillion.
$10 trillion worth of properties or assets are going to be inherited. A lot of that is property, and a lot of it's clustered, with the top 10%. But there is tremendous amount of real estate out there that's going to be passed down, and it needs to be sold or it needs to be renovated, one of the two.
Sure.
If I inherited an old property, I might not have the money to put into it. So I don't want to inherit the property. I want to sell it. I want cash.
There's so much you can do and leverage a property, though. So if you just have a little know-how, you can do a lot. But it surprises me at the type of properties I see people let go of. It's crazy.
What do you mean?
Well, we see people that have properties that are in their family for 100 years, waterfront, beautiful properties. And we see this all over the place, especially here in Rhode Island. We have Newport, we have Narragansett, we have all these places westerly all along this shore. And we're starting to see this movement. We're starting to see families realize, hey, you know what? We don't want to base ourselves just here. People are looking for that flexibility, right? They're not looking to be kind of stuck in one area. And I know it's a little bit different conversation than the commercial, but at the same time, it just kind of shows the mindset of some of the younger generations. And just because you're an investor or you're somebody that likes to develop doesn't mean that, your children might. Like I'm raising Emilio, my son, to hopefully be a developer as well too, but it doesn't mean that he's going to want to do it. He may take my portfolio and he may just say, I want to sell this thing.
Yeah, that's right. And that may be the best decision. So sometimes you think you're doing your kids a favor by leaving them, with the family heirloom that maybe is a house down by the water somewhere, and it ends up being a burden.
Mm-hmm. Sure does. But we're seeing this all across the country. So I'm glad we brought that topic up. What makes you say yes to a joint venture, a JV, we call them, partner, and what are the red flags that would want you to say no?
Well, again, you're looking for alignment of interests. You're looking for people that want to team up for a joint effort, a joint venture to do something. And another interesting thing about our business is these joint ventures are very well defined. So we've identified a site. We're going to buy the site. We're going to build this, and we're going to sell it. So it's a very defined business plan. And especially, I think, in the home building side, there's a beginning, a middle, and an end. Well, anything. You have a very defined business plan of what you're going to do.
Sure.
And you have an exit out there. As long as you have that alignment of interests and both parties are working towards that goal, then, you should be able to get something executed.
That's an area too where you want to have a very experienced attorney, somebody that deals with joint ventures working on your behalf, because you don't want to get caught up in the weeds of just an agreement when you have everything else you have to tackle. But it has to be laid out, because you never want to be in a situation where you're partnering with somebody where they're like, you should have done this or you should have done this. Like, it's all spelled out. We get to stay in our lane. In the businesses that I have, every last position of what I'm doing and then my partner, whoever it is all laid out to the point where we never have to argue about anything. We never have to ask about money or about this or that, because it's so well defined there.
Yeah.
I mean, wouldn't you agree that that's probably one of the best areas to be taking an attorney in on?
Absolutely.
Yeah.
Yeah.
Have you ever been burned by a partnership?
I can't say that I have.
Okay. All right. That's good. That's good. How about, how do you vet? This is super important. How do you vet someone's integrity? Do you go by a gut feeling, or How do you know?
You have to do a lot of things. You have to go by a gut feeling. You have to look at how you met that individual. What was the connection there? And then, you can go on the internet and you can find out pretty quickly if somebody's in the news and they've had,
Fake news.
litigation is certainly a red flag.
True. Yeah.
Yeah. It's a relationship business. So you rely on people that you meet, through the process. And one of the neat things about Center New England is all the people that we have met. We've been fortunate to meet, I'd say maybe almost 100 companies in the process.
Amazing.
Maybe 20 of which we're working with on a contractual basis of some sort. We have a small army, that's working on the project. It is a relationship business, and that's another thing that makes real estate particularly interesting.
Mm-hmm. Absolutely. You have to rely on people. You have to have trust, and you need to trust that your team's going to do what they say they're going to do, or else, like you said, time kills deals. The more time you waste with the wrong people, the less likely you're going to succeed.
Yeah.
I've got a question for you on mixed use. So mixed use, while it's super complex, right? Let's say you're building out a project, and the project has a hotel, it has some retail, and it has some residential. Which component do you start first?
You can't always dictate that. The market will dictate that. And not everything is going to go off at the same time and complete at the same time. It's not going to happen. You have to push as hard as you can on all factors. At Center of New England, we have 8 different sites. They're all planned for some different use. They all have a different business plan. They're all proceeding at their own logical pace. So it's very difficult, I think, to game that, unless you have unlimited resources and you're playing a longer game, which does happen. Family offices, big corporations, they might have land holdings that they can nurse along at a slow pace, and they could maybe game that a little bit more. Housing is going to absorb as fast as it gets built. So it just needs to get built as fast as possible, and it's pedal to the metal.
And I guess that's why I was asking, because if, let's say, I guess in a perfect world and on paper, everything looks perfect until you actually do it, right? But in my head, when I was asking that question, I was wondering if maybe you would say residential real estate, because that turns probably the quickest in getting a large anchor, in a retail.
Yeah, correct. Yeah, and you touch on the retail sector. It is a favorite sector right now, in addition to multifamily and data centers. Retail has new life. The neighborhood shopping center is harder and harder to replace. A good grocery anchor will not close in a good location. And good anchored retail or triple net retail is a good place to be. There tend to be long-term leases. It is something that you can stabilize and capitalize on. And let me touch on leasing for a second, which is the name of the game. But learning how to execute a lease from as a broker, as a third-party agent, you have a front row seat with the property owner. So you don't actually have to own the property.
That's right.
But if you have a marketing agreement, then you're able to participate in that transaction, make a fee, create value, and learn in the process. Right. So I started in the brokerage world in commercial property sales, and so that's how I learned the business. And it is a good starting point for people that are want to get in the real estate world.
That's amazing advice. Thank you, Tim.
And I'm going to add to that is the finance world. Mortgage banking and commercial lending, also good training ground. You'll see a lot of deals, and you'll see how these deals are put together, and you learn how the lenders look at the world. And that's a whole other subject for another podcast altogether.
It is. Actually, so it brings me up to a question that I wanted to ask you, right? So when you're approaching lenders, and look, you have the experience, you were working with a developer over the years, or you're a real estate agent, and, you have experience in the transactions, just not physically doing the transaction, just not physically doing the development yet, right? What is something you can say to a lender to get them to build trust in your ability to get this to fruition?
Yeah, you have to go on your track record, and you have to have the capital to be able to do it. They're not going to lend you 100% of the money.
No.
So let's say you wanted to borrow $1 million. They're going to be looking for $500,000 from you to put down on the property. So money talks, and your financial statement. You're going to have to sign personally with that lender, and you have to have some assets to back it up. So money talks.
But I think I agree. Money does talk, but is there more than that? Is it like, your reputation obviously it can help you out too, right? So if you get like one of the things, like if you get like a letter of recommendation from somebody who's successful, who's been in the business that, or you get, you find a project that has so much upside in it.
Mhm.
The bank I think a bank, they look at all of the intricacies of the deal and they're not just saying like, hey, this is it. I think the bank you can negotiate with, right?
You have to have something.
Yeah.
In the way of real estate, you have to have a lease.
Mm-hmm.
They're not going to lend you any money on your good looks, no matter how good looking you are.
I'd be screwed.
You'd be screwed. So they're looking for what's the business plan.
Yeah.
It goes back to the business plan, which makes sure that it's concise and it's backed up by facts, market knowledge, and you have a specific plan. You're going to buy this site. You're going to lease to McDonald's. Here's my lease.
Yeah. Perfect.
Okay.
Triple net.
That's easy. That's an easy yes through committee. Now you start arm waving about, well, I might do this, I might do that, and lend me some money on a whim. It doesn't work that way.
No.
And if you're going to buy a house,
Yeah.
And you're going to lease it out, you've done your homework, you know where your tenants are. Yeah, we'll loan you some money to buy that house and lease it out, but where's the lease? If you don't have a lease, then you're flying blind a little bit, and they're going to loan you. Some people, they buy a house for themselves and they fix it up and they sell it. And they move out. They take their wife and kids and they move out and they make a few bucks on the house.
Yeah.
Okay. All right. That's a way to get started. Or they buy a condominium when they start out. And then when they have kids, they buy a house in the country and they keep the condominium and they lease that out. Okay. That's one way to usually have a loan on the property by then.
Sure.
It's very difficult. Without a capital base and without a track record, it's very difficult to get a loan.
Yeah, it's a difficult business to be in. And that's why I'm so excited to learn the inner workings with, reputable people as yourself, Tim. It's a lot of fun and I love that. And I love the challenge, as do our listeners. Rapid fire. Okay. I'm going to ask you this all at once, and then we're going to break it down to one lesson, one book, one failure, one prediction. Let's start with the one lesson that's really shaped your career that you want to share.
I'd say, everybody stands on the shoulder of somebody else. So you learn from the people that came before you. And, you try and take what you can from the people that have been successful. How were they successful? How did they get started? What did they do right? What did they do wrong? And so that would be, I'd say, the first lesson is to learn from others.
One book. What's the book that?
Okay,
really
that's an
shaped your
easy
career?
one.
Yeah.
I just read a book about Elon Musk. That's not the first one I read. It's the second one. And he's just an amazing individual. He has tremendous drive. He's very smart. As a scientist, he also had a feel for marketing and for the ability to get a product to market. So he was very tuned into what people would pay for. And monetizing is one thing to fly to Mars, the other thing to monetize that. And he has been able to monetize the space business where nobody thought it was
amazing.
possible.
Yeah.
He redesigned the satellite and is making money at what he's doing. He's not doing Teslas for fun. He's doing it to generate a profit. He's an amazing story. He's an amazing individual. And so that's I get a lot of inspiration from him.
Yeah.
I know. I often think, what would Elon do right now?
He invented industries.
It's remarkable what he's done.
Insane. Absolutely insane. That's amazing. Great. What's the name of that book?
The Leadership Genius.
The Leadership Genius?
Elon Musk, I believe.
Perfect.
Leadership Genius,
Awesome. Awesome. One failure, Tim.
One failure, a project that we got into where we didn't foresee the time that was going to be required, and it dragged on for years, and you'll never get the time back. So that is something that it's been a tough lesson to learn.
One prediction.
My prediction is that America is stronger than ever and will continue to get stronger. And it is the bet to make. Okay, so just a sidebar. The S&P 500 is the 500 strongest companies, mostly American. And it's very interesting because every year companies rotate on and off that index. So if you're not making it, you're not cutting it, and I'm not sure what all the criteria are, but if you're not profitable, you drop out. And the profitable ones come on board. So it is by definition, it is the 500 best companies according to S&P, in the country. And if you bet on them, you are betting on the strength of the global economy and the American economy.
Pretty amazing.
And it has returned 11% over the last 20 years.
Yeah, it's
So,
unbelievable.
I mean, think of that.
It's better than real estate.
And you don't need an advisor. You basically do it in an index fund, and it self-selects the top companies for you, and it allocates that across. Now, right now, the S&P is dominated by the big seven. Okay, great. You benefited from the big seven, but you also benefited from, the other up and coming companies that are coming on the S&P because they're growth companies. So it's a very interesting way to look at investing.
It's great. Good stuff. Great prediction. When you're buying real estate, you need somebody that understands the ins and outs of the legal ends. It's so important to have the right attorney working for you. You also need a bulldog. Let me tell you something. The first time I sat in a conference room with this lady, Melissa Delana of Delana Law, I immediately knew she owned the room. You need an attorney that owns the room, that can solve problems and make things happen when everybody else can't. You want to hire Delana Law in Massachusetts, Connecticut, or Rhode Island. Delana Law delivers every single time. They're going to help you out with all of your real estate needs. It's delanalaw.com. You got to check them out. Thank you so much. Tim Eden of Starr Capital. Look him up. Go ahead. Starr with 2 R's. Tim Eden of Starr Capital. And you can check all of this content out on our Instagram, on SoundCloud, Spotify, YouTube, Facebook, pretty much anywhere where you can imagine. We're all over the place. Again, thank you so much, Tim. Great guest, great information. You're welcome. Good stuff. Episode 12 of The Wealth Architect. Thank you for joining. Make sure to give us a follow and subscribe.